Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic day today. Today is HUBB Live Trading Room with Mike Wade. Today, we're going to go over a quick market review. We're going to go over the sniper performance which means it's pretty good. It's like 13 in a row, 34 out of 36. That's a little ridiculous. Not a lot ridiculous, a little ridiculous. And then we're going to go over a trade of the day. We're going to talk about Mike's sniper guidebook. And then we're going to go to some of your questions, some of your stock tickers. So any tickers that you do have, any symbols that you have, go ahead and put them in the chat and I'll go ahead and write them down for you. Let's get to the man, the myth, the legend. Mike Wade, how you doing, sir?
I am doing well, buddy. How you doing, man?
Doing good, doing good. Mowed my lawn this morning, feeling great.
In the morning?
Yeah, absolutely.
It's probably hot there in Columbia, South Carolina.
It's right? Actually a decent 70, 78 degrees. Not bad.
Well, that ain't bad at all, man.
Yeah, not too bad.
A nice secret temperature. Yeah, 34 out of 36. Can you freaking believe that, man? That's
pretty good.
Remember our gang with Spanky and those guys? You're probably too young for that, but
yeah, I don't remember that. Unfortunately,
they would animate like.
Yeah,
and
exactly.
Yeah, we're enjoying a nice win streak, and typically this system operates at about a 90% win rate, and that's without the AI signals. And you're starting to see the impact of AI signals because we've been incorporating them lately. And this sniper system is about getting on base, taking 10% every 7 days with a 90% accuracy. That's typically the run rate, our current run rate. Ryan, I'm off script again, as I always do. Let's pop this up so we can really orient people as to the power of high probability short-term trading. And here it is. This is the real deal. This is trades that have been placed live this year. We placed 36 trades. 34 of them are winners. Our winners, they're done. They're closed. The two we did last week in the Thursday morning show are closed already. And we have a 94% win rate. That's 34 divided by 36 is 94%. And our average profit per trade, we call that APL percentage, 14.31% every 5 days. And that's because we've had a win streak. Ultimately, over time, this system tends to normalize out at about 10% every 7 days with 90% win rates. We don't win all the time. We've only had 2 losses this year, which is exceptional. But I know over time, having done this for many, many years, that this run rate will normalize probably closer to 10%. Now, as I said last week, even if it's 10% every 5 days, you can take the same money, trade it, in a month, you can trade that at least 4 times and then multiply your weekly gain by 4. And then you're starting to get into the 40% range if you manage your money correctly. So this is systematic trading. There's a guidebook that we talked about last week. We're going to pull that up here in a minute. But so this is what we do here. And I want to start by looking at the markets today, Ryan. And let's go right to the HUBB software. And if you have questions about the HUBB software, just ask them. Even if it's how do I draw a line, let me know. And I'm happy to help you with all that stuff. So we've had this bounce here. The markets have risen strong, right? This was Chicken Little, skies falling. Oh my God, we're dropping to earth. We got this massive volume bounce here. This is called capitulation. When you see a market collapse like it did here 2 weeks ago, maybe 3 weeks ago, I can't remember. It's about 2-3 weeks ago. We had the jobless claims number came out higher than expected, much higher than expected. The next day, industry pundits came out and said, oh my God, there's too much joblessness. We're going to have a recession. And the markets tanked on that fearful news. And then they've bounced since. We've had jobless CPIs, PPIs, inflationary reports, jobs reports that have come out that were not as dire as over here. And then here we have these SPYs. I haven't told you what this is. The SPYs, the ETF that tracks the S&P 500. We've hit 560. I call these lines in the sand, but that's resistance. At a round number, 560, 2 days ago, bounce off 560. Yesterday, 560 was tested. Indeed, today, 560 is being tested. So it's hit a brick wall. It's hit resistance directly at 560, right on the money, right on the round number. So part of this system is about support and resistance. I call them lines in the sand. And what's very powerful about these is that these are derived by institutional money. 80% of the market, depending on market conditions, et cetera, et cetera. But the bulk of the market is controlled by institutions. Institutions have human beings that think in round numbers, that use computers, programmatic trading to manage their very large portfolios. So with that distinction raised, the institutions are saying, all right, let's take it all the way up. It hits 560. Let's pause. Let's pause. Let's pause. Let's pause. Why are they pausing, you might ask? Here's why. If you look at, you can go to this website here, marketwatch.com. You can find these reports, economic reports anywhere, but this is where I go. There's other places. Marketwatch.com /economy-politics/calendar. And you can see all the major economic reports and Fed speak during the week. And here's what the institutions are waiting for. Initial jobless claims. That report comes out tomorrow morning. No, sorry, today's Tuesday. Thursday morning at 8:30 Eastern Time. It's expected that jobless claims will be 230,000. If that number goes higher than that, and God forbid, much higher than that, that could very well spur on the recession word, and we could have another correction, perhaps to the likes of this one here. All right, so that's what I'm waiting for tomorrow. I would not at this stage, and I'm not myself, taking any directional trades until after 8:30 in the morning tomorrow. So when the markets open tomorrow at 9:30 Eastern Time, provided the jobless claim report hasn't tanked the market, then I'm more likely to take a directional trade. But it's time to pause. And one of the things in trading is you don't have to trade every day. You don't have to. So that's the market condition. Now, the good thing about snipers, because of the way we trade with credit spreads, what's a credit spread? Get the guide. It's free. You can get it in the morning if you come to the HUBB show tomorrow at 9:15 Eastern Time. We'll do all of this again with current setups for tomorrow. But we're going to sell a credit spread allows us to make money above or below a support or resistance level. Mikey calls them lines in the sand to make it less intimidating. Lines in the sand. And so we can trade these in any market. I'd be hesitant to trade bullishly when the markets are correcting. Not going to do it. I would be okay here in this run. I'm not going to trade directionally because tomorrow the market may tank or it may set new highs. That's an all-time high right there. So that's the stage we have. And now I want to take you to the AI signals because there's a good one, I believe, for today. All right, so I've clicked the AI button. I've got wave 3 bullish, and this was the signals from last night. So we're on August the 20th. Today in Costa Rica, anyway, it's August the 21st. So these are 1 day behind, which is super fine. And, remember, however you trade the AI signals, you want to look for 2 scores, at least 75. And that says that the particular trend, this one is bullish in this case. So bullishly, PFF has an 82.5% confidence that it's going to keep on going up. It's going to keep being bullish. PanW has a 73.49%. So the confidence level that PanW will continue up is a bit lower. All right, so if you want to trade in the direction of the trend, look for scores 75 or higher. Let's check out the bears, see if there's any bears here. There's no bears from yesterday. Now, the other way you can trade them, as I mentioned last week, and if I remember correctly, August the 5th is a good example where the markets were tanking. And let's go to, you see all these lower signals here. And this is a review from last week. And you can see here that these low scores are also good for us. 25 or lower says the confidence that the stock that's in this bearish list will keep on dropping. And if you take a look, let's just take a look at DBA. That's got a 14.72% rating. And that signal occurred right there. All right, so that would have been a perfect time to put a credit spread underneath the stock price because the chances of it dropping, at least from the AI score, are only 15%. So we can trade these turnarounds. And indeed, the way credit spreads work is if you can find a stock that has plummeted and is about to bounce and it looks like it's not going to drop any further, we can come in and sell a credit spread and make more money and get more credit for those trades. So in summary, we're looking for two thresholds. 85 or higher means that the category being displayed, in this case bearish, has an 85 or greater percent confidence that it's going to keep dropping. Or 25 or lower. And so this one here on DBA on this day only had an 18% chance of dropping lower, back down to the target. So that's the general distinctions around how we're going to use credit spreads with these AI signals. So now I'm going to go to today here, or yesterday actually, and I'm going to go to bullish. Now this one has an 82.52% score. And if I pull up PFE, let's move the chart over a little bit here. So here's your wave 3. And this particular setup has an 83% rating or confidence level that is going to rise up to 32.47. And so that's the strategy for us. We want to add even more probability by using a line in the sand. I got the wrong line here. Let me get rid of that. Press the wrong button. There's my horizontal line. And I would say on this one, if I could sell a credit spread down here around 31.50, what does that do for us? So conceptually what that does for us is if the stock does continue to 32.47, we're going to make money. If the stock doesn't go anywhere and goes sideways, we're going to make money. The stock could even drop below 32 support. There's a support. Let me show you these levels. I want to teach you how to derive these lines in the sand. Resistance, resistance, resistance at a round number. Resistance there at a round number. Breaks resistance at 32 and starts making a run. This looks very good to hit 32.47. So back to potential loss in this trade. So the stock could even drop. It'd have to drop below 32 support. It'd have to drop below, I'm just looking at these pivot points here, 31.75, and then back down to 31.50. So we make money up, we make money sideways, we make money down, but not too much. So as long as the stock stays above 31.50, we're going to profit. That's where your probability comes from. You could buy a call option here, but if the stock drops, you're going to lose. If the stock, a call option, if the stock dropped to 31.50 and maybe breach the fail zone where your stop loss should be, you're going to lose money. In our case, if the stock drops and stays above 31.50, we're going to make money. So we sacrifice potential big profits in exchange for getting on base. Baseball analogy, just get on base. Get your 10%. Get on base, get on base, get on base, 10%, 10%, 10% every week. That is this game. And of all the trading styles I have, and I trade a lot of different ways, this is my favorite one because it's fun. It's so fun to trade this way. Okay, so let's just see if there's a good trade for us here. So what do I mean by a good trade? Well, there has to be an option chain that supports the rules of snipers. And you can, in HUBB, click, let me go back to, I didn't tell you what I just clicked. So right down here at the bottom left, there's an option chain. And this is not quite production yet, so I just want to show you what's coming. Right now, it's only showing October options. There's actually shorter term options than that. And then from here, you can actually build a credit spread. It's not quite there yet. It's coming soon, very soon. I'm not going to give you a date because I don't know what it is. But JP and I were talking about this, and this is coming soon. So eventually, we're going to be able to generate these risk graphs right on the HUBB software platform. So what I'll do now in a live environment is I'm going to use this mechanism called Thinkorswim. It's one of the brokers I use. I have a few that I use, but Thinkorswim has a simulated trading platform. So the reason I like to use this platform in this mode is so I can demonstrate how to navigate actually placing these trades in a live environment. All right, so what I'm going to do now then is take us back to the chart just so I can reorient myself because I forgot the strike. 3150 is where I'd like to sell a credit spread. All right, and that credit spread will make money anywhere above 3150. The only way we lose is if the stock closes beneath it. Very simple to manage these. So then I go to the option chain for PF. Oops, what was it? I already forgot the symbol. Go back to the dashboard here. PFF, I missed an F. So PFF, I'm in the option chain now, and I look here and I can see that the granularity of the options is 30 days wide. These are monthlies. One of the rules of these credit spreads is don't use options that expire greater than 21 days. 14-day options are the sweet spot. So we like to do 14-day options. We're not super excited about doing 30-day options. Why? Well, it gives the stock more time to move against us. Like a thief in the night, we want to come in and take our 10% and leave. Take a little bit, get out before you get shot. Why I call it snipers. So that one's not going to work because of the option chain. But if I wanted to build the trade, I would go back to my 3150 level. I'm not going to pull it back up. So 3150, I could sell the 3130 put spread. And I can see here there's only 5 cents credit. All right, so that's, I need at least 10% of the spread width, which is 1 in this case. I need that for 10. And I don't want to be in the trade for 30 days. So I'm going to pass on that one. And this is what's going to happen from time to time with these signals is that the option chain won't line up with the rules of snipers. All right, so for this particular session, I'm going to be deviating from snipers a little bit. Tomorrow morning, I stay very succinctly to the rules. It's a system. And another a piece of trading advice for you is trade like a machine. Have systems that discreetly and very objectively tell you when to get in and when to get out for a loss. So the Sniper's Guidebook is exactly that, a 5-step process that will walk you through every step that you're going to see me do, certainly on Thursday mornings. Here, we might do some other things, but at least for now, we're going to try to stay with the Sniper script. All right, now here's another one. This is on Pan W. I already did a sniper on this one yesterday, and I got out in the same day. I actually sold a 330 spread yesterday and was able to generate like 10% in about 3 hours. So that is that's already done, but we can still do another. Now the signal here has a 73% confidence of reaching. Let me get rid of Elliott Wave here. Clean the chart up a little bit. So this one has a 73% chance of hitting 404. Now, let me show you something. Here's 375, round number. Back over here, when the stock hit 375, what happened? 375, nope. 375, nope, nope, nope. And then, ba-boom. So I'm not super confident that this stock this time is going to break above 375. The confidence level is pretty good. It's not quite 75. So the next question becomes, well, is there anything that would lead me to believe that this stock will stay above this fail zone? This helps, yeah. We got resistance though. So I wouldn't do this trade without any more information. But we have more information. And let's put that graphic up on PanW. Ryan, please. PanW yesterday had earnings, and they beat on earnings, and they raised future guidance. That, even without the AI signal, is enough for me to consider trading this one. All right. So I'm going to take into account the 375 resistance. It could drop. It's got support at 350 right there. There's some support at 350. We got our fail zone right here at 333. What if we go just beneath that to 327.50? I'm going to show you a little trick with this software. I'm using this line drawing tool here, and you can get that under studies. Again, I can show you how to do that. And if I edit the settings here, I can actually change the strike prices. So maybe I try for 327.50. I know there's strikes there. So 327.50 is beneath the fail zone. I might even go up to 330. All right. So because of the news, because the stock already responded well to the news, because there's a 73% statistical AI score that it will continue rising, which is really good. And if the stock drops, I've got support at 350. And then I've got also support at various other levels as well. So let's see if we can get anything at 327.50. I'm just going to take a look here. I already did. I've already teed this up a little bit. Let's see what the credits are right now. All right, so I'm in PanW in the option chain. We have August 23s. That's 2-day options, 9-day options, 16-day options. So I usually go right to the number of days that's closest to 14. I will expand this option chain, and then I can start taking a look at what kinds of credit are available at 327.50. Even 330 would be good too. But let's try 327.50. And I can see here that if I sold the higher strike at 327.50, that's the strike that corresponds to the line in the sand. We make money above, anywhere at or above 327.50, and then you buy the underlying credit spread. All right, that's going to give us 19 cents currently. All right, the spread width is 2.5. All right, so 10% of $2.50 is 25 cents. I can see right now that there's 31 cents available. And so what I'll do here is I'll do 2 contracts. I'll build this in a risk graph here for you in a minute. Let's go see if we can get 30 cents on this one. The order is to sell 2 of the PanW September 6, 327.50 puts, buy 2 of the PanW September 6, 325 puts for a credit of 25 cents. I'll tell you why it's 2 in a minute. Confirm and send. I'm going to go to monitor and look at the open order, and I can see it's wrestling with 25. I'm going to let that sit. That's my minimum price. I'm not going to pay. I'm not going to take any less. I'm going to let this trade come to me. I'm not going to go reaching. I'm not going to go wanting. I'm going to say, all right, there's my trade. This is what I want. And if you don't give it to me, fine. I'll try again tomorrow. So let me go back to the HUBB chart. So this is the trade then. What we're doing here on this one is we've constructed a credit spread such that as long as the stock stays above 327.50, which is 5 points or so below my fail zone, then we're going to make money on this trade. So that is the system. Now you could go up to 330. 330 would be good. You definitely get your 25% there. Your 25 cents there is available at 330. So that's an alternative trade, which I also think is a good one as well. Because I'd say anywhere at or below the fail strike zone is a good setup. Let me go back and see how that trade's doing. Now I can see that there's only 11 cents there. So what I'll do then is I'm going to lift the spread up by 2.5 points and see if I can get my 25 cents. And so what you can do in your broker is you can take the order and cancel and replace it with a new set of strikes. And I can see here that it's now down to 13 cents. So I've got to move it up to get the credit I want. I'm going to hit these in Thinkorswim anyway. You put your cursor on the line, and then this little button here pops up. Looks like a menu button. You click it, and you cancel replace. And now I'm going to lift my credit spread up to 330 by the underlying, the next available underlying, which is 327.50. And I can see there's only, we might get that. Let's put it in for 29 cents or 25 cents. Confirm and send. And that one just filled for 25 cents. Okay, so that's in. Now let me show you the trade now. I want to, here's the filled order. So we sold 2 Pan W, September 6, 330 puts. We bought 2 Pan W, September 6, 327.50 puts. The credit was 132, the debit 107, netting us 25 cents. So let's go to a risk graph. These are also coming in the HUBB software. They're just not here yet. Okay, so let me go ahead and edit this trade here. And I'm going to show you in Tom's tools. Most of you know Tom Gentile. I know him well. So 330 and 327.50. Let me hit update here. And now I want to talk to you about how to manage this trade. This is the most important part. So let me reflect exactly what we just did. And so what's great about risk graphs, and I'll show you here just quickly, that when you go to options, you'll see there's the ability in HUBB to go to the risk curve. That's not ready yet. The option chains aren't quite complete. Risk curves aren't quite complete. So the risk curve I'm going to show you is from Tom's tools. Tom Gentile, my brother from another mother. All right, so here's what we just did. Same thing, same order. And now what I'm going to do is go get the actual prices that were filled in this simulated environment. So we sold the 330 put for 132 and bought for 107. So I'll put those numbers right in the risk graph here, 132 and 107. And then I'm going to update this trade. And so this is our trade. So you're asking me, you might be asking, well, why did Mike do 2 contracts? Well, I want to limit my risk to 2 to 3% of my portfolio. Hypothetically, we have a, what's the math? $10,000 portfolio or $25,000 portfolio. 2% of that would be $500. So that's rule number 1 in trading: is don't put all your eggs in one basket. Your portfolio has a value. 2 to 3% is the max, maybe 5% if you have a smaller account. And that is going to be your first move. Don't risk any more than 3%, 5% max on any trade. And that's why I did 2. One of these trades, just so you know, has a max risk of 225. And so I knew that when I placed the order. And so I knew if I did 2 of them, that my total risk would be $450. So here's our trade. And you can see that, well, let me just quickly orient you to risk graphs. So we have our profits on the bottom axis and the stock price on the vertical axis. Another way to think of risk graphs is payoff diagrams. It translates stock price and time to profit and loss. And so what you can see here is the expiration line. This one is showing you the max profit in the trade, which is 50, and the max loss in the trade here at 450. All right. As time happens, there's actually 3 other lines here. We have today, which is red, 1/3 of the time gone, 5 days. Later is blue, 5 days later is green, and at expiration, black. So here's how it makes money sideways. Tick, Here's I didn't distinguish the break even. This is the break even line, and then as time passes and the stock goes nowhere, as time passes, tick 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 profit, and that tick 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 profit exists all the way down to here. So that way, the stock rises, we make money. Stock goes sideways, tick 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 tick, we make money. Stock drops as tick 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 is happening, and we still make money over a period of 16 days, provided the stock stays above 330. So I know that's a bit complicated, which is why we have a guide. It's free. We're going to talk about that in a minute, how you can get it. So get the free guide, and it'll walk you through every one of these steps. And you can see me trade these every Thursday morning for free on the HUBB channel at 9:15 Eastern Time. All right, now, the most important part here is risk management. And so what we're going to do, we ain't got no time to lose $450. Ain't nobody got time for that. I don't want to lose $450 on this trade. I'm going to take it off sooner than later. If the stock closes below 330, our line in the sand is 330 now. If it closes beneath it, right at market close it down. In that case, our risk is managed to about $200. Just under $200 is about where we'd be exiting this trade. Yeah, but can the stock gap down here? Yeah. If the stock is here today, down here tomorrow, we're going to lose $300, depending on how far it drops. So gap risk is an issue, which is why you don't want to risk more than 3% of your portfolio on any given trade. All right? So, I'm here to show you how to use the software, to show you how to manage credit spreads, the sniper system. But really, what I care most about is building really healthy trading habits so that you can trade consistently and repeatedly. And maybe you too can enjoy a 90% success rate, making 10% on average every 7 days. Okay, so that's the stop loss. So all you got to do on this chart then, you go back to the HUBB chart, and our new line in the sand, let me get rid of the options here. Our new line in the sand, let me edit the properties of the line here. Watch what I'm doing. I'm going to click the line and edit settings, and then I can make the value 330. All right, so the game here for risk management is you just keep an eye on the stock. The stock starts dropping, it hits 333. Have an alert with your broker. I can show you how to do that as well if there's a question for it. And then you let the GTC profit stop, which we haven't done yet, take your profits. So let's do that part. Again, it's in the guidebook. So once you're filled, and we got filled for 25 cents, and we have a position down here on PanW. We've already made $34 on it, $32 on it already. PanW must be rising. So we've already made a bit of money. Let's create the GTC stop to buy the spread back for 10% of what we sold it for. So we just got $50 of credit in our account. And we're going to buy that. So it's a short spread. We're going to buy the short spread back for 10% of what we sold it for, netting 90% of our max profit. And so let me do that. Again, in Thinkorswim, the way you do it is you position your cursor right on the filled order, and right at the end there's a little menu button, and you create the opposite order, flip the battery in backwards, buy back the 330s, sell the 327s, and your limit debit price will be 3 cents, and that's going to be a good till canceled. All right, so this is the order to close the spread out. Buy back, same number of contracts you sold, of course. PanW, September 6th, 330 put, and then sell the PanW, September 6th, 327.50 put. That will be a debit transaction. What you want to pay is 3 cents. Make that a good till cancel. Confirm and send. Go back to monitor here. And that order is sitting there. Look, we sold it for 25 cents a few minutes ago. And now it's worth 10. 10 cents. You could literally buy this back for 10 cents right now and net 15 cents times 2 is 30 bucks. But don't worry about that part. This trade is already looking really good. And there is a good chance that we'll be out of this trade later today. And certainly, as long as the stock stays above 330, there's nothing to do. The GTC profit stop will close your position sooner than later with the automatic buyback. So you don't have to worry about collecting profits. All you got to worry about is if the stock starts dropping and you see it approach 330. And so let's say today the stock's at 333, then I'll be watching this at 3:30 Eastern time, 30 minutes before the markets close, and I'm going to be ready to close the spread down right at the close of the market if the stock looks destined to close below 330. All right, to me that's simple. Now, if you've never done this before, Ryan, we need a guidebook, right? We do have a guidebook. Oops, I shouldn't have done that. Let's show the guidebook. There we go. So here's the guidebook, and it's available by attending the free show tomorrow at 9:15 on the HUBB channel. And Ryan, I believe you could probably post that link, I think, and join us Thursday mornings where we do this live. And the reason that we do it at 9:15 in the morning is if we can place these trades right as the market opens in the first 5 minutes, we can generally get more credit, especially on stocks that have gapped. Ryan, that was a lot, I know. So do we have any questions?
That's good stuff. I mean, that's what we're here for, man.
That's what
That
we
was
do
great.
to make the 94% win rate has been accomplished with this. So
That's awesome.
if it's complicated, if it seems complicated, it is at first, then grab the guidebook. Actually, I'll show you quickly what it looks like. So I think it's well written because I wrote it, but it goes through every single step that I'm mentioning here, finding a gapping stock, verifying what kinds of news do we like to trade, identifying your line in the sand, building your option trades. So here's where the credit spreads come in. What's a credit spread? How do you build it? Bulls and bears, tricks about max risk over max ROI, all of that stuff, risk graphs. And then most importantly, step 5 is manage the trade. And you've just seen me do all of this just now. And we do this every Thursday morning and now every Wednesday afternoon at noon. So please grab that guidebook. All right. Any questions, Ryan?
I'm not seeing any questions in the chat. There's a Q&A. Oh, here we go. Are you saying you would only make $25 each contract when successful on this trade?
Correct. Ask the real question. That's not the real question. Only $25. Well, only 10% every 7 days. So if you're stopped by the small amount of profit, remember, we are sacrificing big home runs and doubles and triples. All we want is to, like a sniper behind a wall at wartime, we want to snipe these credits and win most of the time. Indeed, 94% win rate. 90% is typically where we run. And we generate these very high probability profits every 7 days, systematically, easy to manage, essentially set and forget, make your 10% every 7 days, do it 4 times. That's 40% a month. That's not guaranteed. Things can happen, markets change, but that's the run rate we've been playing with, doing these live for over 2 years now. Get on base, get on base, get on base, get on base. 10%, 10%, 10%. That's this game. And there's others to play, but this is a game that, my business partner Gerardo and I started a company about two years and a month ago, where we decided to wrap community, love, support, truth around trading. And this system was something I built so that the novice trader to intermediate trader could grab a set of rules that could routinely allow them to pull out 10% of the profits every week. And again, do that every week for 4 weeks, and those numbers really add up. So that's the system. There's other ways, but I do this and a handful of other things as well. My own account, I love this strategy, and this is the strategy I usually introduce people to when they want to learn to trade. All right, Ryan, any other?
Looking at some more of them coming in here. Jeff asks, does Thinkorswim's paper money account let us backdate trades for paper trading practice as we get comfortable with the sniper method?
Yeah, it doesn't it will do it in a live environment. It's called on demand. It doesn't do it in the simulated environment, and I've tried to use it, and it's very cumbersome, and I don't think it's functional enough to effectively backtest. But if you have Tom's tools, which I do, then you can use Tom's tools in backtest. So literally, I could say, I could go back in history. Maybe I go back to August 21st, 2023, and I can build trades that way. Let's do one of those really quickly here, because I know a lot of you are from Tom's community and my community, same community, essentially. Let's go back to the HUBB software, and I'll show you how to backtest. So let's go back to 8.5. Remember, we had all these bearish signals. All right, so let's just pick one of these here. I'm going to find one that I think has some liquidity. Here's Caterpillar. And if you go back to the signal date, which was here, and that date, I think that was, it's August the 5th. So on August the 5th, that would have been a good signal. Now, of course, we know the stock rose. So on August the 5th, what I'll do here is go back to Tom's software and reset my option chain to August the 5th. Okay, so now I'm in, let me make it August the 5th. Wait a minute, what have I got the right date here? We have different date formats in the US. So let me make sure I got the right signal date. Looks like that date happened on the 5th. We'd have to take this trade on the 7th. Okay, so that's fine. So the 5th was August 5th was a Saturday. So we'd have to take it on August the 7th. So that signal came up on the Saturday. So we would take it to the 7th. All right. So if we go back to the software, so this is the 7th. And then ideally what I'd want to do on this one to backtest it is sell the 295 put. 24% chance of hitting 295. So then I'd say, all right, what can I get for a 295 put spread? I go to option chain here, and I'm gonna use 14-day options as close as possible. And then I'm gonna sell once again. Let me just draw the line in the sand so I'm following the system. So my line in the sand is going to be right here at 295. Okay. And then I'll go back to Tom's tools and I'll build the risk graph at 295. Okay, so here's Tom's tools. I'm going to go find my 295 strike. Is it 195 or 295? 295. Let me get the right stock. That would help too. I forgot to do that part. So type in your symbol here. So I know this is another piece of software and not everybody has it. I'm conscious of that. So I'm going to do the August 25's 18-day. I'll click update.
They're saying wrong year.
Oh yeah, look at that. Thank you. So 8/7, there you go. Thank you for that. So August 23, 16-day options. I find the 295 level, which is here. I need an extra strike. So I'll increase the number of strikes shown. Please don't worry about the software. You don't need the software to do these, but to backtest, you need some software. So this is one way to do it. So I'll do a -1 there to sell the 295 put, and then I'll buy the 290 put underneath. I'll hit risk graph, and this would have been the trade that was available. And I can already see here that there's not enough credit. 16 cents, 3.3% potential profit. So the only choice I would have here is to go to 330 or 300, excuse me, or 297.50. The next set of strikes up. And then, that's the idea. And so this one at 330 wouldn't have worked because of the rules. So then you can start to play around with getting closer to the heat. Generally, I don't like to do this. 332.50, 330, lifting the spread up 2.5 points. See what the credit is. Oh, I got the wrong strike here. Give me a sec. So this would be 330, 300 and 250. Excuse me. Risk graph, lifting the line up to 302.50, and there's no strikes there. Anyway, that's the process. I'm not going to go any further with this, but you can figure it out if you have Tom's tools. And if you're in my community, you know how to use this. And if there's a call for this, I can spend time in Tom's tools for until we get the option chains in working in HUBB, which should be here in the next handful of weeks. All right, so that's how you can backtest these things, but you need software to do it. Okay, any other questions, Ryan?
Yeah, there's a couple of them in there. Probably too many for us to get to today. If you have any questions, feel free to email support@hub.com. Again, that is support@hub.com. I'll put that in the chat again. Yeah, if you have any questions, feel free to direct them that way.
Right on. All right. Well, Ryan, I think we're finding our groove here, and we want to keep this interactive. So please keep your questions coming. We'll be here. Give me the right screen here. We're here every high noon every Wednesday, and then tomorrow morning 9:15 Eastern we have the HUBB free show. So join us at the show. Get the guide. You can get the guide at the show tomorrow morning. And there's plenty of earnings this week, so there should be an opportunity or two for us to take a look at tomorrow. Again, we've had 36 trades. 34 of them have been winners so far this year. With that, Ryan, thanks for joining me, buddy. Always a pleasure to be by your side. Have a great week, everybody, and hopefully we'll see you tomorrow morning at 9:15. Have a good day, everybody. Bye.